Hello guys, welcome to Trading Science. So in this video, I'll be sharing you the most powerful intraday strategy, which is for option sellers. And why I'm saying the most powerful is so in this strategy, you will not get effect on psychology terms. Most failure traders is because of psychological mistakes in discipline. Okay, so because of this strategy we can avoid the psychologically mistakes towards the trading, so that we can make some consistency money in from this strategy. Okay, this is an intraday strategy and this is only for option sellers. Yeah, let's get into strategy without any lag. And before going to that, I just want to show you something. In our YouTube channel, I'll be posting the psychological videos and the price action videos and weekly analysis stocks and index. So you can check out videos here, and I'll be sharing you the price action breakout stocks for the long term and short term as well. So let's get into the strategy without any lag. So this is a Nifty 15-minute time frame. So there are few conditions you have to follow for this strategy. I'll tell you the step-by-step strategies. And the first step is we have to wait for the 15-minute candle close. Okay. So this is a Nifty 15-minute time frame. And let me show you that 15-minute candle. I'm taking one example for the strategy explanation. After that, we will see the back test result of the strategy. Okay. So here we need to mark the first 15-minute candle high and low. Okay, first 15-minute candle high and low we need to mark, and these high and low has to be, if you check the length of this, it has to be below 0.5%. It should not exceed more than 0.5%. That is our first condition here. Okay, so if it is a valid candle, valid candle means below 0.5%. Okay, so this is a valid condition, and once it is broke the high or low, so that is where we have to take the entry. So in this case, our entry would be this level. Exactly, once it is break, we need to take the entry. Okay, and the entry has to be taken in options selling. Okay, we need to sell the call option at this scenario. Okay, we need to sell the options. So how to choose the strike price? So here we have to divide this length. Here we have to divide by three types. So these are the three types I have to divide. The first one is the low of the, which can be at the money, and high of this will be out of the money, and you need to take half of the candle. Okay, half of the candle somewhere around this level. So this is one strike price. So now we have three strike price. Okay, so if you take at the money, your risk will be high. Okay, and if it is reversing from here, your stop loss we may reach easily. Okay, so we will avoid this at the money selling. Okay, and if you take at the money, so your stop loss will be a little what same as at the money, and the probability of reaching the stop loss is less compared to other money. Okay, sorry, let me change these to OTM. So this will become OTM here, because so option is already moving below this level. So either you sell the second OTM or third OTM. Okay, so if you sell the third OTM, the stop loss will be little bit more than ATM, because due to decay, by then it will be giving, it will be candle will be big in option. So but the probability of reaching target stop loss is less. So I recommend to use any one out of the money, or these two, either three or third point and second point. So anyone you can choose the strike price. Here in this case is 18,001 strike price and 18,050. Okay, every time you will not get same exact points. So some points difference there will be. You can take the round level strike price, that will help you. So in this case, I suggest to take 18,000, because 18,000 is a round level, and the probability of crossing the 18,000 round level is less. Okay, like that you can prefer you can choose the strike price. Okay, now we have a strike price of 18,000. Let's open the 18,000 chart. So you can see this is a 18,000 chart. So expiry, you can take the current expiry or the next expiry, because I prefer the next expiry, because if you take the today's expiry, like current expiry, uh, so Friday is fine. Friday and Monday is fine. When you go to Wednesday and expiry day, your stop loss will be higher and the target will be lesser. So I prefer to take the next expiry than current expiry. Okay. Now you can see I have marked this level. Okay. So you can see this has to be entry. As you just mark it. So somewhere around you will take the entry, and SL you keep the high of the candle. Okay. And you see this stop loss here, almost 40 points. Okay, 40 points stop loss. And the stop loss here. And the fourth point is you have to choose the target. The very very important point for the traders is choosing the target. So stop loss anyone can choose the stop loss based on the stop support and resistance. But when it comes to target, you may feel some greediness, and you may not exit in the proper target. So in this case, I'll give you two types of targets. Whichever you are comfortable with, you can go for it. Okay. And at last, I'll give my suggestion also. So let's say you took the entry this level. Okay, stop loss is this one. So my first target has to be 1:2. Okay, 1:2 this level. Okay, first target is 1:2 as per rule. And the second target, like, if you this is first scenario. If you want to go for first scenario, you can exit with 1:2 target. And if you want to go for second scenario means second target, if you can delete this, and you can, instead of keeping 1:2 ratio, you can wait till end of the day, like 3 p.m. Okay, remember the time, 3 p.m. By 3 p.m. At any cost you have to exit, because as per my back test result, after 3 p.m. options premiums are getting increasing more, instead of falling. Okay, so it's better to exit at by 3 p.m. Okay, the advantage of waiting till 3 p.m. is, if it is a trending market, you will get a complete premium. Okay, more than 1:2, 3, 4. Okay, because you are choosing the next expiry, you will get more premium when it is a trending day. So in a sideways market, sometimes if you are going for 1:2 ratio in sideways market, you may take little bit targets, not 1:2. Okay. So either you go for stick with 1:2 target, or stick with 3 p.m. Till wait for till 3 p.m. and exit. So you have to go for any one of these. You cannot mix both the targets, and whenever you want you can shuffle both. Okay, either you stick with 1:2 target, or wait for 3 p.m. Okay, uh, this is entry and exit at target. And so, now we had seen the entry and exit, as well as stop loss for this, and choosing a strike price as well. And you don't try for option buying at this strategy. This is only for option sellers, and go for out of the money. Okay, and when you have to avoid the trade means, so when there is a big candle like this, above more than 0.5%, you can avoid this entry points. So let's backtest from current market to from next to 1 month backtest result. This is first one and the second high. Here after this, after so many candles, it broke after 11:30. Okay, but I strongly suggest here one point. So wait for only 3 to 4 candles. Okay, 3 to 4 candles, not I would say 10 o'clock. Okay, not more than that. If it is not giving 10 to 10:15 entry, below that, just avoid the trading for the day. Okay, if it is consolidating in between a lot of time and then breaking, there is a high probability chances of failure breakouts and all. So avoid if it is breaking after too many candles. Okay, either it has to be break 4 to 5 candles below that. Okay, so this one we will avoid. And you can see here, uh, this is a failure candle. Okay, so let me check the percentage here. Yeah, okay, this is a valid candle. Here you will sell the option. Okay, strike price is 18,000. Correct? Sorry, 18,000. 18,050. Okay, 18,050 strike price you will sell here, and you will keep a stop loss 15-minute high, and this in this case it hits a stop loss. Okay, so if you closely observe the candles here, let me show you 1850 candle. Let's go to option chart. Let's back test this scenario also. So you can see our entry would be, this is our entry, and the stop loss is this level. Correct? So if you mark this, you have 36 points of stop loss. When you see here, so as soon as it reaches the stop loss here, by the time 130. So here if you go to 130 here, you will exit at this point, at this level. Okay, now if you see the stop loss points here, from here to here, you will, if you take it, it would be 10 to 15 points only. So this is power of time decay. So in this way we can avoid giving the initial stop loss, and it will trail the stop loss for you in the form of time decay. In the previous day, you can see I marked a high and low here, and I'm checking the length here. Length is below zero point 0.5, so it is a valid. We will take the entry here, and the strike price has to be 18,100. Okay, 18,100. So you can see you will sell this SL here, and you will sell this point here, and the stop loss is for 20 points. So you can see stop loss is only for 20 points here, and the target is, first target is to be 1 is to 2. So it didn't reach 1 is to 2 by 3 p.m. So if it is not reaching it 2 if it is not reaching, we will exit at 3 p.m. exactly. Okay, in this case we didn't lose anything. Okay, we didn't lose anything. By break even with 4 to 5 points we exited. So you can see this is when it broke these levels, we'll take the entry. Uh, Here it is below zero point 0.5, and you may give some little bit stop loss here. And if you see this day, this is no trading day. We already see that, and here we got a complete end of the day by complete premium here. It would be more than 1 is to 2. And also here this is one trade, and it closed below the entry price, means we might have get some profits only. So here also you can see it broke the low level, and by end of the 3 p.m. it closes below the entry point. Okay, and this is also profit. And you can see this is broke the low level, and okay, it's a valid, and it gave the SL, and most probably you would have give small SL here. And next day is, this is one more entry, and you can see it ended up at a higher levels, so you would have get more premium here. So, and this trade, yeah, this is zero point 0.7, so we will avoid this trade. This day we will avoid. And you also see here another trade, it closed around here. So by end of the day it is a profitable day. And here it broke this upper level, and it broke around 130 time. So by then you would be having some decay, and you may not give the full stop loss here. So it's a stop loss day. And here also you can see it's a broke downside level and break upside level, so it's a SL day. Okay, there are some SLs also has to be given. So you can see this is okay, this is also valid. Okay, this is our entry, and by end of the 3 p.m. it closed above the enterprise, so you would have get some profits. Here also you can see by end of the day you would have get some profits, the trending market. And even in the sideways market also you can see, even in sideways market also. So if it is expiry day, you get some decay. Like this you can also do some back testing. I have done the back testing from last few months. I have been doing this. So by the end of the month definitely you see some profits. So we can avoid giving the more brokerage charges to brokers, and we can avoid the psychological mistakes on this strategy. So so that you can make some consistency money by the end of the month. So try to back test this strategy before you start using the strategy. Okay, I'm personally using this strategy. It will definitely help you to make some consistency money. Okay, your stop losses would be around not more than 40 points. You may not give the 40 points more than that, but when you get the profit, so definitely you may get more than 100 points also. 1:2. Okay, so I sincerely suggest to use this strategy if you are having losses from using different strategies. So this will definitely help make you money, some consistency money. So if you like this strategy, don't forget to subscribe. I may give so many uh, option selling strategies and option buying strategies also in future. So as per this, so in future I'll be posting more and more intraday strategies. So subscribe for more for subscribe for more. Subscribe our channel for the intraday strategies as well as positional strategies, and don't forget to comment which strategies you are looking for: positional, swing, price action, indicator trading, anything. Okay.